getting a pre-approval in the mortgage process.
Thanks for having me on.
Yeah, definitely. How are you?
I'm doing fantastic. Thank you.
Perfect. Awesome. So why don't you give everyone just a little bit of your background, how long you've been doing things, a little bit about your company, and we'll get started.
Sure. So my name is Christopher Daub with Sierra Pacific Mortgage, and I've been in the mortgage industry going into my 5th year, and based out of, I have an office in Lancaster that I sit out of, and then mostly work from home in northeastern Lancaster County, Pennsylvania.
Awesome. What counties are you currently working in?
So the 3 big counties are Lancaster, Berks, and Lebanon. However, for the most part, I work in South Central Pennsylvania.
Awesome. Very cool. I was going to say you do some in Chester for me as well.
Yes. So, some greater Philadelphia, but, for the most part, South Central PA is pretty much where I do most of my activity.
Awesome. Awesome. So today we're going to be talking a little bit about the mortgage process, how to get a pre-approval, why it's very important to get a pre-approval before we start looking at homes. And Chris is going to go into a little bit more on that. First off, what is a pre-approval even?
So a pre-approval is a lender's best guess that it is very likely that our client will have a home at the end of the transaction. That's essentially what a pre-approval is. Consists of 3 different parts. During an application, we would grab information regarding your credit, income, and assets.
Okay. And why, a lot of people ask me, why do I need to get the pre-approval before I step foot in a house?
Great question. And I run into this all the time.
Yes.
I have clients that, when I talk to them over the phone and I'm, trying to ask them questions and learn more about them and their scenario that, hey, they only want to start this process when they find the house that they love.
Yeah.
And that's great. And that's wonderful. And boy, do I hope that you have everything ready to go. Because what happens is it's a very highly competitive market.
Yes.
We're recording this video in January of 2021. And in the market that we're in right now, it's highly competitive.
Mm-hmm.
There's not a lot of inventory or not a lot of homes out on the market. And offers on homes, sometimes they're being snatched up in 8 to 12 hours.
Yeah.
It's been absolutely insane. And because of that, if you're trying to get a pre-approval done and trying to get an offer in on a property and it's off the market in 12 hours, good luck. It is not going to happen. Mm-hmm. So having the pre-approval done and having it in advance is highly critical for when that dream property happens to pop on the market, and you can relax because it's a simple phone call to Katie, and Katie can get the offer out, and we just need a cost estimate. We're good to go.
Yeah.
If you don't have that pre-approval done, and then you're calling Katie, then Katie's going to recommend her lenders. Well, I would be one of those. And then all of a sudden we're in a mad 11th hour dash to try to get it in on time for the offer. So, alleviate yourself of that stress by getting it done early and being prepared and ready to go.
Yes, and we've had that a couple times before where we don't have somebody pre-approved and we have to rush, try to get it done, and it's just a lot of stress. So definitely get that pre-approval first. And then, like Chris said, we don't have any issues. You just call me, we're good to go. All right, we talked about why you need one. We talked about the process. Why don't you tell us a little bit about the different kinds of loans that are available?
Sure. So, without getting into anything too generally specific, we have different loans that we can look at. So USDA is a very popular one. A lot of first-time home buyers take advantage of it. It is income-based. It's also location-based. So depending on where you're looking, you may or may not be eligible for this program. And there's a very minimal down payment. In fact, there's not a down payment for
Mhm.
USDA, which makes it very attractive for those potential clients who are able to fit into their tough box to fit in. So that's one type of loan that I look at for clients. Another one that I look at is FHA, which is the most popular program out there. You only need 3.5% down. The nice advantage with USDA and FHA is that you can get a decent amount of seller help, up to 6%. Now, with that being said, earlier in this conversation, I had mentioned how it's an extremely high competitive market. So the likelihood of getting, full seller help isn't as good. So anything you can do to put yourself in a better position is always great.
Mhm.
Then we have conventional loans, which minimum down payment is 3 or 5%, depending on your scenario. And those are generally cheaper than the FHA loan, um, but it is a little bit tougher to qualify for and then to fit into that box, which is why FHA ends up becoming super popular. And then we get to my favorite, VA. And I love the opportunity to work with a veteran when we get that opportunity, because it's a great way for us to be able to give back to those who have served our country.
Yeah.
There's also 100% financing available, just like USDA on that one. Seller help rule is a little different, but it's very advantageous in the right scenario. And you have to serve in the military, and there's some other requirements with that. But if you have any questions about VA eligibility, I would be able to help you guide through that. So those are the four major types of loans that I typically work with a client.
Okay, awesome. So questions that I've gotten from people about getting financing. A lot of people come to me and they say, I don't want to get my credit pulled by multiple people. It's going to ding my credit. It's going to lower it. How does that work whenever they're putting in the application and speaking with you or possibly multiple lenders?
Sure, absolutely. And the one thing I'll definitely mention, it's always good to shop around. It's always good to have multiple conversations with multiple lenders. Not that I, want to deal with competitions per se, but at the same time, you got to find the right fit on who the person's going to be, and what are the terms. What does that look like? Obviously, if you only talk to one, you're only getting that, and that's the only thing you're seeing. If you're talking with more than one, then at least you kind of get to see, who's offering what or who can do what.
Definitely.
And when you're talking with the lender and they pull credit, usually the hard inquiry that's on there, it's a very minimal impact, usually a few points, nothing major, unless you've been applying everywhere in the last 2 years. Then that can adversely affect the score. If you've been trying to shop for a car and trying to open up a whole bunch of credit cards and then try to get a mortgage, it's a little bit different as opposed to, the last thing that you've done with your credit was, try to buy a car a year ago. That's going to be two completely different scenarios. But what I can tell you, though, is that if you are talking to multiple lenders, you do have a shopping window. And I've heard conflicting information on this. I've heard 14 and I've heard 30 days. So as long as you have your credit pull done within, we'll call it the 30 for now, the 30 days for when you had your initially pulled from the lender, that's when all of those inquiries will all count as one, because the credit bureaus know that you're shopping for a home, not trying to buy 3 homes because you're talking to 3
Yeah.
lenders. So if you have that opportunity to talk with a few lenders, and Katie does have a couple that she does recommend, definitely take advantage of those opportunities and
Mhm.
figure out, who's the best loan officer for you.
Awesome, definitely. And most importantly, how would someone find you? How would they get a hold of you, get in contact, and get this whole process started?
Sure. So you can find me at a couple of different places.
Mhm.
Katie has an app that she can forward to you. which has all of my information on it. So that makes it super easy. If not using the app, you can find me on Facebook by literally Googling or searching my name, Christopher Daub. You can also Google me. I'm also there. I'm also on Zillow. So if you type in my name, Christopher Daub, or Christopher Daub Mortgage, I will definitely show up on Google. So it's a great way to be able to, see my details. And I also know that, I have multiple reviews on all sites. So it's a great way to be able to kind of get a feel for what it's like to work with me before you even talk with me, which is pretty cool.
Definitely, definitely. Awesome. Okay, so I think that'll wrap up for today. Is there any final thoughts that you have to tell everyone?
Yeah, I mean, the biggest thing again is, don't wait until the dream house comes up, because in this market, if you do, there's a good chance that you won't be ready to go at the time that you're trying to put in an offer.
Yeah, definitely, definitely. Awesome. Well, thank you so much for joining me this morning. It's always a pleasure.
Yes, thank you very much for having me on. I appreciate it.
Definitely. And as always, if you're looking to buy or sell a home, invest, know someone, definitely reach out. Even if it's in the near further future, reach out. There's never, it's never too soon to start planning, right?
Absolutely. I tell clients all the time, it's never too early to talk with a mortgage lender.
Definitely, definitely.
Just in case. So
awesome. Well, thank you so much again for joining me. And
yes.
I'll be seeing you soon this week.
Yes, absolutely. See you soon.
All right. Talk soon.
All right. Bye.
Bye.